This is Seewing Yee, and today I have a very exciting presentation video to share with you. I'm going to talk about is the Airbnb crashing. By the way, I also recorded another video on an Airbnb crashing, so please uh, go to my YouTube channel and listen to another perspective. But today, I'm going to quote several resources behind my video. One of the resource I'm going to quote is very credible. The other resource that I mentioned on this video, you can make the argument that source that I'm going to talk about in this video may or may not be credible. So without further ado, let me share my screen and go over the headline of this video or this article, Data Digest, inventory and the purported Airbnb crash. Now, before I go any further, the beginning of this article is referencing this is a new viral tweet going around from YouTube housing influencer Nick Gurley from Venture Consulting. Venture Consulting. Let's look at the source of this information from this particular person. If you're not familiar with the YouTube influencer, I've been watching YouTube for a while now, for the last several years. And this Nick Gurley right here, he had produced all kinds of negative headlines. It's all clickbait. He, for the lack of definition, and his company, Venture Consulting, I believe is the king of the clickbait, of the housing crash porn, the Crash Brothers, I call it. The word Crash Brother is all over the YouTube news recently. He talked about working crash like 30%, 50%. The world is coming to an end. The real estate crashing worse in 2008. Sell now, liquidate. So he has providing so much negative clickbait headline so he can monetize his YouTube channel. Look at him. Everything's negative. So as a result, he's getting tons of views, tons of subscribers to a point where he's monetizing his YouTube channel and he's capitalizing on all these subscribers, all the clickbait, whatever. So I don't know. That is, he's producing information that are potentially damaging to consumers out there who's trying to learn about real estate, who's trying to learn about doing better, who's trying to achieve the American dream by buying a house. And this individual and all the doom and gloom information that he put out, I have to say that he is doing people a disservice. He's probably directing more people out there who continue to stay on the sidelines because of this negative crash information, housing crash information, and what have you. Now that the housing crash is pretty much behind us, there are no housing crash. If you look at the real data, if you follow my YouTube channel, if you follow all the credible information out there in any mass media, there's really no housing crash at all, because right now we're seeing very historic low inventory of supplier homes, and we're still getting pent up demand, and housing prices are rising nationwide these past 6 months of 2023 to around a double digit level. Time will tell. No one can predict the future. So this guy and others like him, Nick Gurley and Venture Consulting, and his doom and gloom narrative, whenever the data, he's getting airtime. He's getting a lot of buzz. He's going over to the mainstream channel, CNBC, ABC, whatever, all kind of mainstream channel, and he's making himself being more popular, and he's getting famous for all these reasons. Anyway, let's go over this data, okay? Let's repeat. Now, he's trying to provide his own data. I don't know where he get it from, but let's go over the pros and cons and what credible sources that will try to refute his data that the Airbnb housing crash is going on right now. Nick Gurley, he's using this one source, and I have not looked deep into that much. This website called All the Rooms. So he provide this chart from this website. By the way, everybody, including myself, I'm going to do a deep dive into this website, All the Rooms, how they came up with this data. And this data right here, this chart, it says All the Rooms website is trying to make the case that the Airbnb short-term rental market is, quote, crashing, end quote, and it will have a big impact on inventory. Once again, negative headlines, sales. So by the end of this 10 to 15-minute video, I'm going to provide credible data from another source, AirDNA, very credible, that they were trying to refute this potentially negative and inaccurate data. And the first data I'm going to share with you is chart by, again, All the Rooms website, which Nick Gurley at the Venture Consulting is using this source to get his message across so he can become more famous than he has been, to me, in a very negative way. So Airbnb revenue collapse, but based on this chart from All the Rooms, the top 10 cities of Silverville, Tennessee, Phoenix, Austin, and the list goes on and on. He says right here, the revenue May of 2022 compared to the revenue of May 2023, it mentioned 47% drop, 40%, 30%, and 30% in all the top 15 cities, as you can see yourself, right? Then that's nearly a 50% drop in revenue in some markets. That is quite disturbing if it is true. Let's see. Here's the data. Look, the data look dubious. Jamie Lane, the chief economist and head of analytics on AirDNA, which I consider one of the most credible marketing sources around short-term rental space and Airbnb. And Jamie Lane, he looked at the data from All the Rooms and he ran a mirror analysis with Airbnb's data, apple to apple comparison, and take a look. You see the data from Airbnb, same city, same kind of metrics, and Airbnb data shows a mere 9.4% drop in revenue, minus 7%, minus 4%, double digit in only one location in Maryland, 0.04%, 2%, all mostly single digit on similar cities, similar metrics. At this point, we have to decide upon if we would do a deep dive and do more research. Let's see which chart is correct, which chart is not correct. By the way, feel free to comment below on this video. What are your thoughts based on your information? And where you live, by the way, or do you own Airbnb? If you do, share with us your experience about what's going on with respect to your revenue. Because the way I look at it, the Airbnb industry, the Airbnb asset class is so widespread. There's so many locations. I look at Airbnb asset class no different than any other aspect of the housing market. There's no such thing as a national Airbnb corruption or housing crash. Is a Airbnb is local. Every neighborhood, every region, every city, every market are different because they're all types of Airbnb houses, different types, different type of houses, different type of Airbnb. Some are in beach, some are on a mountain, some are in the winter resort areas. It's just so vast. There are so many. In fact, there are around 1.4 Airbnb listings. There are 1.4 short-term rentals spread out all across the 50 states. And this top 15 list by this company, All the Rooms, only go over a mere 15 metros. Okay? 15 cities. But You know that there are like 5,000 cities in the country. There are like 2,000 counties. Don't quote me. This is just a very limited sample size. Do you agree with me so far? I hope so. All right. Here's some great information that are quoted uh, by Jamie Lane, the founder of AirDNA. So revenue per listing is down, but it's not down by a third or more in those markets, according to AirDNA. Okay. But again, this, I believe Mr. Nick Burley, he is, I don't know, somebody I do not respect who runs this. He's the king of the doom and gloom crash flows. And he's trying to enter into the Airbnb crash flows. Now that the housing crash flows are pretty much behind us, which is our crash didn't happen. So he's pivoting, Mr. Burley and the venture consultant, he's pivoting into Airbnb crash. And he's trying to bring this message to the mainstream media so he could capitalize on his own personal narrative. All right. So he said he's aware of this discrepancy between the data, the chart that was shown by Airbnb that's showing only a single digit slight decrease in revenue year over year May. Then he said, I'm aware of the data of the discrepancy, and I have reached out to Airbnb, Nick Gordon said, to provide their own data of these cities so we can get the most accurate figure. Airbnb itself said in a statement that the data, quote, not consistent with its own, end quote, and added that more guests are traveling on Airbnb than ever before. So this sentence clearly is implying that Airbnb is very robust. There are more revenue being generated recently by Airbnb than ever before. So this is, again, Nick Gurley responded by saying, oh, both data sources agree that the Airbnb supply in America have surged in the past 2 years since the pandemic started, particularly in cities like Phoenix. In some markets, there are 2 or 3 times more homes listed on Airbnb than for sale. You can read it, you can pause this screen and watch it yourself. Then Mr. Lang at Airbnb counter, I don't see a crash happening, even though the revenue is trending down from last year. And it is relatively saturated marketplace in some metros, some localized metros. Yes, there are some saturation of Airbnb. To say it's a crash is a very misleading, very spur of the moment. Is you just can't jump into a conclusion by just listing 15 of the metros on the chart as provided that are Nick Borley and the venture consultant is trying to reference. Mr. Lane goes to say, I see that as an entirely false narrative. That's right. The venture consulting and his company, All the Rooms. I never heard of this company, All the Rooms, this website providing this potentially inaccurate chart. Okay, Mr. Lane from Airbnb further saying, I see this is an entirely false narrative. The short-term rental industry has very healthy performance right now. If you look at the overall occupancy for 2023, the industry is going to run 57%. That compares to a pre-COVID level of 55%. So we are well above pre-COVID occupancy levels. We are down from 2021 highs, of course, but that was a COVID anomaly in terms of industry performance. 2021 is a very unique year, which will never be replicated in the history of the world, in my opinion. So Airbnb expect modest Airbnb revenue declines throughout the rest of the year. Modest. A 1% drop for the rest of the year and no growth in 2024. With a 1% drop potentially, not 40 big, but drop. That is so misleading. Come on, let's be real. And then let's dive a little further. Mr. Lane maintains that the fundamentals in short-term rental remain strong. We see lower churn today than some pre-pandemic. The travel desire is absolutely real. A large segment of the population is more mobile than ever thanks to remote work, and about 20% of listings are private or shared rooms, not entire houses. More importantly, Mr. Lin said, Airbnb revenue for most posts across the country is still strong nationally. We don't think the likelihood of forced sellers, okay, Airbnb owners, they're not selling, they're not under distress for the most part. Okay. If you look at revenue today, Mr. Lane further said, average revenue per listing compared to pre-pandemic, we are at 30% higher. And that has barely come down off the highs in 2022. The earnings of short-term rental operators have not collapsed by any means. Wow. It's hard to say, but a short-term rental crash like the one Mr. Nick Worley from Reprinting Consulting describes already did happen back in 2020, a slight crash in 2020 during the beginning of the pandemic. But in 2020, listings fell by 25%. We saw many markets essentially decline by half, but with no interruption to the broader housing market. Even the slight short-term rental disruption in 2020 at the beginning of the pandemic fell by 25%. At that time, there was no overall disruption to the broader housing market. Mr. Lane from Airbnb further stated. As I conclude this, inventory as ever is key to all of this. Currently, there are about 1.4 million short-term rentals listing in the US, while there are about 600,000 active for sale listings. Even if all the 1.4 million short-term rentals listings hit the market at the same time, still there would not be a housing crash, according to Mr. Lane, and according to myself, and according to a lot of credible sources. Okay, credible versus non-credible. Added link for Airbnb. When you look at major cities, let's say the 50 largest metros, most of that Airbnb inventory is not available full time. Over 50% was available for rent less than 180 days from the previous year. So it's not full-time short-term rental investments. Lane argues that a flood of Airbnb wouldn't crash heavily the saturated markets either. Even the saturated market crash, markets that are listed on that chart, the top 15 cities that are listed by this website that Nick Worley supports, is still not going to crash those particular markets. Wow. The broader housing market needs more inventory any which way it can get. But if you don't see much coming from non-viable Airbnbs, how could you, any way, shape, or form, say there will be a worst case scenario, all 1.4 million short-term rentals are comes to the market to sell it, which is not going to happen. Okay, there are many Airbnb owners are doing very well. The small mom and pop owners, look at the new resort in the Colorado region or California. There's so many asset classes that are doing well. People own Airbnb for years in many locations, up and down Atlantic coast, North Carolina, the coastal area, South Carolina, and all over Florida. Airbnb doing very, very robust throughout the whole year. And we're talking the Gulf Coast, Texas, Gulf Coast, Mississippi, Alabama, and the mountains of Tennessee, all those cabin Airbnbs and Airbnbs in upward state New York, and even over Midwest, or the resort town, or the mountains, or ski towns, and beach resorts. There's so many Airbnb owners doing so well all over the country, because Airbnb is a huge real estate asset class. Okay, just is very localized. Yes, there may be some slight single-digit year-over-year revenue corrections, as indicated by the Airbnb chart, that will clearly going to be filled by this non-credible website that are indicating 40% down revenue. That is, I believe this data, something wrong with this research methodology by this company. Anyway, so what do you think? What do you think of all these conflicting counter arguments, all setting betas? So I already told you what are my thoughts. My thoughts is there's really no crash, a slight correction in some local areas. Yes, from a short-term basis. Yeah, there may be some Airbnb owners that enter this space late in the game and they didn't know what they're doing. The newbies out there, they try to, they think it's a short-term revenue generator. They think, you know, they are they don't know how to run their business, and not everybody can do hospitality business. It takes a lot of effort and time. And you have to find the right property. You have to crunch the numbers. You have to factor in the vacancy factor, the maintenance factors, property management fees, and occupancy rates and vacancy rates. You have to factor in everything to make this process profitable. Also, if our Airbnb or asset classes are not doing well, a owner could potentially pivot. They can potentially will do a mid-term rental or long-term rental. There's a lot of ways. There's a lot of exit strategies available depending on your situation out there that the Airbnb owners can pivot and do different things. They can sell if they want to, but I wouldn't call it a stress situation at this particular moment. So I'm going to do more research. I'm going to look into this. So far, in my opinion, a non-credible source that producing this very inaccurate chart. In the YouTube world, mainstream media, negative news sells, and somebody try to promote themselves. That's the way it is. And you have to take it with a grain of salt. You have to do your own research, find the credible sources, dive deeper into any kind of negative headlines. You have to dive deeper beyond that. So that's what I do. I've been doing it for a long time. So let me think, comment below. What do you think about what I just said? What are your thoughts? Do you own some Airbnb rentals? How's your Airbnb have been doing in the last few years, this year, whatever? Share your thoughts. I know that are listening from all over the country, and I would like to hear some of your wins, some of your challenges, and hopefully you can refute this perceived Airbnb crash, which is once again another exciting story. People want to promote themselves. People want to create the chaos in this marketplace. Like we need any more chaos in this housing market, right? We need to show positive reinforcement. I try to be positive. I can never do any kind of clickbait reporting. It's not me. I do not speak that low. I have morals. I have ethics. I cannot for clickbait, doom and gloom, negative, inaccurate information just to get more subscription. Even though I would love to get subscription. With that said, if you see value from this presentation, please smash the like button and subscribe to my YouTube channel. I provide some hopefully amazing contents on a weekly basis. And I also help people to become a real estate investor. So please also quickly visit my website and drop your email into my newsletter database so you could become our free real estate member. So every week into your email inbox, you will receive free real estate investing information that will show you how to become a successful long-term real estate investor. Our network is a community of several thousand members, and we help investors to buy out-of-state turnkey cash flow properties in the most affordable entry-level markets in the country, the fastest growing, especially in the Midwest and South and Southeast. One-stop shop property management, turnkey providers will do everything for you. You can become a remote, almost passive real estate investor, so you can invest for the long term, buy good markets, buy cash flow markets, and create long-term wealth for yourself and your family. Thank you so much. This is Seewing Yee, and I'll see you all on the next video. Have a nice day. Bye-bye.